Joining us right now, Hugh Johnston, Disney CFO. Hugh, it's great to see you. Congratulations on what has turned out to be a great quarter. Want to talk about that great quarter. Also want to talk about the experiences piece of this, because that's clearly a challenged part of the business. And I think a lot of people have questions just about where the consumer is going in this country and elsewhere around the world. And then I want to get into the pricing issue, given that some of your streaming products are going to go up in price, and just how much pricing power you think you ultimately have. But let's go back in time first and talk about this last quarter.
Yeah, happy to. Good morning. Great to be with you guys, as always. Quarter was very strong, as you noted, 4% revenue growth, 35% EPS growth. And as a result of that, we raised the EPS guidance for the year to 30% growth. So certainly feel really good about that. Portfolio is working very, very well. And as you all have noted, most importantly, the entertainment business, which is really the heart of Disney, is performing exceptionally well right now. You know, in a lot of ways, we've returned ourselves to the standard of excellence that we had when we were producing multiple billion-dollar films per year. And we had the three biggest films the biggest film in May, biggest film in June, and biggest film in July in total, aggregating to almost $3 billion in box office. So feel really, really terrific about how that business is going. And that, of course, pumps oxygen into the rest of the company. So, yeah, it's been a great quarter, and we feel very, very optimistic about the future. On
the streaming side, is this a major turn? I mean, we've swung from a big loss, obviously, to a gain now. Is this a turning point not just for you, but do you think this is a turning point for streaming more broadly?
Well, we certainly think it is for us. And if you look at sort of where we've been over the last few years, you go back a couple of years ago, we were losing $1 billion in a quarter. Now we're at the point where we said we were going to make money in Q4. We actually did in Q3. And our expectation is we're going to continue to go up from here. So very, very positive about that business. You mentioned pricing as well, and I'll get in front of that one a little bit. You know, it's interesting. People tend to focus on price. But remember, value is what the consumer receives. Price is what the consumer pays. And the value that we're putting into the streaming service with our IP right now, with Inside Out 2 coming, and with all the great TV shows like The Bear and Abbott Elementary and Shogun, we feel like we're earning pricing. And as a result, we can take that pricing.
Your expectation, we're showing the different pricing structures on the screen here. Hulu without ads, $18.99. Hulu with ads, $9.99. Obviously, there's a $9 differential. I assume you're still making more money on Hulu with ads than without ads. What percentage of your customer long-term do you think is going to be watching it with ads and without ads, for example?
Yeah, it's a great question. And the reality of it is we're relatively indifferent between whether they choose with or without ads. We feel good about it. And what we're trying to do is give the consumer the most choice they have and make the decisions they want based on their economics and how they want to invest their time. So if they want ads, that's terrific news for us. If they want it without ads, we're perfectly fine with that as well. It's hard to predict where it's going to land. We'll see what the consumer tells us, and we'll adjust accordingly.